Hey traders, welcome back to another Sunday video where we talk about trading setups for the week ahead. In focus this week, we're going to be talking about the dollar index. We'll take a look at gold, we'll look at indices, and of course, we'll get to currencies as well. In this video, again, my goal is to basically share with you my fundamental, sentiment, and technical analysis for things that I am personally watching in the markets. And if you've watched me for a while, then you know my thoughts on the dollar index. I find it to be probably the most important chart of all, regardless of what you trade. I don't care if you trade cryptos or if you trade indices or if you trade gold. I actually just got back home last night from a in-person event that I did at the Mercedes-Benz Atlanta Stadium. We had a trading kind of gathering there with a sponsor of mine, and I met a whole bunch of traders. And I can just tell you, first of all, if you were there, I hope you got home safely, and thank you for coming out. And if you were not there, I'll tell you this. You know, I've spoken with a lot of traders over the years, and everybody has a little bit different of a style. They have something they do unique. They have something that they trade that maybe not everybody else trades, or they just have a style or something like that. But regardless of your style or opinion, the dollar index to me is very critical to almost every other market. So let's talk about the dollar. What have we seen? What's the behavioral shift here that we've seen in the dollar index? If you're looking at the dollar at this time, you might say, okay, so we've got this big upward trend for the dollar index. And for some time, that continued. That was the easy trade on the block for a little while, right? Stay bullish the dollar index. Then we went range bound. But the issue is, in recent times, we've actually lost that kind of leadership from the US dollar. And when we look at the currency world, right, which again guides a lot of other markets, whether you're talking bonds or stocks or gold, the deterioration of the dollar, the loss of strength in the dollar, we have to ask ourselves, why is that occurring? We'll talk about that so that we can spot if that is likely to continue to occur. Are we likely to see the dollar index continue lower and kind of complete this head and shoulders reversal, or is the dollar set to continue higher on the longer term scale? So we'll talk about that. But again, from a price action perspective first, let's zoom in here a little bit and talk about what we see happening with the US dollar. So clearly, we've had a change in tone. You've had this high marked and then this lower high, lower high, lower high, and all along the way, we've seen lower lows as well. I mean, the last week, let's face it, was horrendous for dollar bulls. This was the worst kind of scenario, is you lost your key support around 106.5, and with that, the flush to the downside continued. In fact, the final resting place for the dollar index last week was 103.5. I mean, that's a big move, and for a currency on a percentage basis, that's a 6% move. That's pretty big. Currencies don't move that much on a percentage basis. So, you know, you had this big slide to the downside here, and I want to talk about why that is. You guys know I've been using, also just a quick public service announcement. If you have the Edge Finder, we just completed building the additional heat maps. We just added Japan, Canada, and Australian economic heat maps, and more are coming. This has been one of the most popular new features that we've launched in a long time. Everybody seems riled up and excited about the economic heat maps, and we're excited to continue to bring those to you. So I want to talk about the dollar for a second. Why is the dollar weak, right? And if we could roll back the clock a little bit, what we would see here is almost all of this being blue, right? Our surprise index. Now, when we're talking economic data, even if you're not a big fundamentals person, what you have to understand is this stuff is really, really critical to the reason the dollar goes up or down. And so when we see, like last week, JOLTS job openings, ADP, non-farm payroll, and unemployment rate, right? Key economic data points that came in all soft. When you get the softness in labor data, what does that do to the dollar? When I say soft, it means it's coming in lower than forecast, right? So the analyst community has forecasts on this stuff, and the actual data comes out worse. What happens to the dollar? Well, it should weaken. And so we're seeing this pattern of what was all blue in the surprise index, where the U.S. economy was just, you know, gangbuster, the top dog, undefeated, and growing way faster than anybody thought, right? That narrative has shifted. So is it coincidental that the chart has shifted? No. Fundamentals lead and price action follows. It's a not popular opinion that I have on my channel that I genuinely believe. The fundamental story has been shifting bearish for the dollar for some time, and last week, finally price action flushed to catch up to the scenario that we're seeing. That plus a whole bunch of tariff news has really got people concerned about growth for the U.S. economy. And you know, conversely, we see places like Europe actually getting a lot of excitement due to the high proposed spending bill for the defense of Ukraine, has, European bunds, which I didn't say that wrong. It is actually BUND, German bunds. They actually shot up in terms of their yield with so many people rushing. To the aid of Ukraine. The spending is expected to be high, so inflation, expected to go high for Europe. So the euro may see less interest rate cuts for that matter, as the ECB can't cut rates as much if there is more inflation. So, that's something to think about. But you have the euro showing some real strength, and we talked about this at the presentation that I did yesterday. Talked a little bit about euro and pound strength on a relative basis. Dollar is losing out to dollar yen as well. And what does this do for our favorite chart, gold? Right? So many people love talking about gold. Me too as well. Well, gold, when I look at these economic heat maps, what sometimes people struggle is they're like, okay, this is cool. I really like being able to see the data like this, but having it in the top setups algorithm takes it one step further. The idea here is now that you've got all that economic data, we want a system that then kind of calibrates it for us and generates a watch list, right? That is the whole purpose behind the Edge Finder. At the end of the day, that is why I built it multiple years ago and why I've been using the methodologies here for years beyond when we built it, right? I want the system to show me basically a watch list of items that marry up nicely, fundamentally, technically, and on a sentiment basis. So we'll get to sentiment in a second, but I want to show you, if I take out minor currency pairs, this is really the simplified watch list that I look at. If you want to follow what I just did, if you have the Edge Finder, what I did is I removed neutral scores from the watch list, right? So I want something that has conviction. And then I want to go to category and just exclude minor currency pairs. Now, I do trade minor currency pairs sometimes, but I prefer to trade majors. And if I can see a whole bunch of majors on the list, I'm generally going to trade those first. So look at what you have here. On the bearish side, you have dollar yen, dollar Swiss, and the Russell. So you have some bearish readings here, basically favoring non-US currencies in basically shorting dollar, buying yen, shorting dollar, buying Swiss. And then on the flip side, pound US dollar and euro dollar are getting bullish readings alongside the DAX. And then gold and silver continue to get very bullish readings. So this is, again, my watch list for the week. Essentially what I now do with this is I then start going and looking at charts, looking for technical setups, managing my risk. And now that I have this confirmation from the Edge Finder, I'm more interested in potentially finding some setups that marry up with my technical trading strategy. That's how the Edge Finder works. By the way, the Edge Finder sale is ending very soon. If you have not picked up a copy, there's a link and promo code in the description down below. You can see the promo code on the screen right now. It is YTVIP. Punch that in at checkout. What you'll see is it drops the price substantially, and that is only going to be the case for a very limited time. So if you've been thinking about getting a copy of the Edge Finder and trading with technicals, fundamentals, and sentiment, again, most traders, I spoke yesterday. I always love doing these in-person events because it's cool, obviously, to be able to do this on YouTube, but being able to speak to people directly in person, you always learn, extra things when people can, kind of speak to you about their trading. And almost everybody that I spoke to, I said, of the three, what do you feel you're lacking the most? Technicals, fundamentals, and sentiment. And almost everybody was like, oh no, for technicals, I'm good, right? It's fundamentals and sentiment. And it's just amazing to me every single time I do one of these in-person events. Obviously, same thing on online, but when I do it in person, people are like fascinated with this concept of like, look, sentiment and economic data. I don't have any tools like that. Everybody's got TradingView, everybody's got MetaTrader, everybody's got CTrader, whatever you chart with, right? Everybody has that. And people feel generally okay with technicals, but it's understanding what smart money is doing, big money is buying and selling. It's understanding what the crowd sentiment is looking like. It's understanding what the economic data is telling us. That's what most people are missing in terms of their capability to analyze the markets. But it's not their fault. It's because tools out there just don't really exist. That's why, of course, like I said, we are a business that builds these kinds of tools for traders to bridge that gap and make them more accessible. Let's talk about the commitment of traders data for a second. Now, this, of course, is always an interesting topic because the commitment of traders data allows us to look at what institutional money is doing. And again, I'm fresh off this presentation yesterday. So yesterday I pointed out the commitment of traders data allows you to track what institutional money is buying and selling. And people were baffled by that. They were like, what? Never heard of this before, which is shocking to me. The COT report is a powerful thing. But the commitment of traders data allows us to track what institutional money is buying and selling. And it's not me speculating. It's not me guessing what they're doing. It's not me trying to look at candlesticks and tell you what institutional money is doing. No, none of that. I find that to be kind of nonsense. If we want to track what institutional money is doing, the best way that I know how to do so is to track the regulated and required by law reports that these institutions have to file. Like the commitment of traders report each week, we can see what institutional money is long and short. And you can see there's gold, silver, yen, dollar, US oil. There's your top 5 most bullish things on a long-term basis, the net positioning. Swiss yen, Swiss, CAD, Kiwi, 10-year treasuries, and the Australian dollar. These are some of your biggest bearish bets by institutional money. But what I like to look at, as I always point out, is this second table. This is the money shot. This is the latest COT buys and sells. What you see up here is great for long-term positioning, right? Because again, this is relatively unchanged week to week. It's just a small, move one way or the other in terms of the percentage balances here. Like gold has been around this area for literally years. Like it's not moved that much. So this doesn't change all that much. But this is shorter term money flow. So if you're a trader, this is the table you want. Honestly, if you're a trader, you could largely ignore most of what's up here. But for traders, you want to look at this section here, the latest COT buys and sells. And what this will show you is it will show you the actual change in contracts this week. Was there a heavy shift in bullishness or bearishness on a certain asset? That is where you want to see. You want to see the latest buys, the latest sells. So this past week, we saw accumulation of the Japanese yen, the S&P 500, the Russell, the pound, the Dow Jones, silver. So in the short run, these were things that got bought. Interestingly, silver was pretty aggressively bought here. On a proportional basis, actually, let me explain this a little bit. So change in long contracts, change in short contracts, both were decreased. So they decreased longs and they decreased shorts. So you might say, well, how is that bullish then? Well, it's because they have way more long contracts and they decreased on a percentage basis way more of the short positioning that they had, right? So if they had like 26,000, they are now down to just 20,000. So there's a pretty substantial swing on the short side. The short side covered a lot more aggressively than the long side may have closed out some positions, but they have way more overall. Hopefully that makes sense. But on a percentage basis, right, something to think about. On the flip side, things that they sold the Nikkei, they sold the US dollar, right? This is not a surprise, I think, to any of us. There was big selling this week. There was institutional money doing the selling, right? Big money was selling dollar, selling copper, selling gold, selling NASDAQ, selling 10-year treasuries. So something to think about. Keep an eye on this. It is factored into our scoring system. So the scoring system looks at what we just did and automatically computes if there was massive, like we saw, like I said, gold, kind of not really impressive. Long-term positioning is still bullish, but this week they sold. Well, what about silver? Silver long-term positioning is bullish, and they also bought on a net basis this week or this past week. So just something to think about, right? Keep an eye on your COT data, your positioning. I'm not going to be able to go through every single column on every single chart today, but that is something that I'm watching for. So let's get back to the technical charts here and talk gold for a second. So gold, I still have a position on this one. I am long as of last Monday. And basically my thought process here is I'm going to stay with the trade as long as we don't break support lower. So for example, if we come down here and just fail out, I'm going to take a loss on this position. And if this chart rips through the highs, that will give me an opportunity to then look to trail a stop into profit, right? So I'm looking for this kind of move this week. If we can get it, excellent. If we see another choppy, this week for gold was pretty unexciting. You had a out of the gate push, but then we pretty much went sideways. NFP on Friday really didn't get, the market as excited as I thought it might. NFP this past Friday was, definitely a bullish event for gold in terms of just the numbers, but I think there's just other forces at play right now. Those other forces, of course, being things like geopolitics and tariff concerns and what's China doing and what's, all these different places doing. So, anyways, for gold, pretty standard stuff here. You've got an upward trend, right? Still overall momentum to the upside. We've gone sideways though, so we're just range bound. I wouldn't call this guilty, as in I'm not saying it's a bearish move or a bullish move. I think you're just ranging in the context of a longer term uptrend. I'm going to believe that that is most likely to continue higher unless proven otherwise, right? So I am staying with the bullish call here on gold. It is still a very bullish reading on the edge finder, so I like that idea, and we'll continue to watch for it. I do also want to just double back here, take a quick look at euro dollar and pound dollar, as these are two bullish readings on the edge finder at this time. So if I'm looking at euro dollar, right, we've broken some key levels here. I'd love to see something like this week. I mean, if you do get a little bit of pullback here, that would be interesting to me for some continuation plays. However, if you get kind of a push retest of this area, I may still be looking to buy the euro on a pullback. Again, I remain pretty bearish on the dollar at this time until something changes, based mostly on the economic data and the commitment of traders data, which just showed us institutional money just sold heavily on the dollar. So, we'll see, but that's what I'm watching. On the pound here, let's take a look at this. Pound US dollar, pretty clear breakout. Right, big resistance broken this past week. If you do double back and pull back into that area, that may be a long trade for me. Now, when I say may, I still have to go look at the time that it is pulling back, that I still have the confirmation from the edge finder, right? I want to make sure that if I'm going to take a trade, 9 times out of 10, I've got to have edge finder confirmation. It is the system that I use to find trades, and I've been saying on my channel that I'm staying as systematic as possible this year. The pound and euro ideas have been bullish ideas the last week or so. I've not been in them yet, but I'm looking for opportunities to join them as long as they continue to have confirmation from the edge finder. So I do like that quite a bit, and we'll continue to watch that close. So let's move on here to indices here a little bit. So last week, really rough week for the stock market. You did have a little bit of a bounce back on Friday, but let me give you this fair warning, right? So on the Friday before this past one, you had a big up move followed by the next Monday just completely engulfing it and selling down into this past week. So are we going to see something like that? We had a big impressive reversal on Friday. I did buy some stuff on Friday. I bought Amazon shares on Friday. With this dip, I am actively looking to buy it. But I will say I'm being patient, right? So I'm buying stuff and waiting and buying stuff and if it goes down. So those are longer term plays though. That's not necessarily, a short term day trade kind of concept. So this week, what I think you want to look for, and I've talked about this when discussing indices, we're sitting at a key moving average. The 200-day moving average is big in stocks. It's big in most things, but it's very big in the stock market. It's something very frequently referred to by traders all over the place that talk about equities. So we're sitting at the 200-day moving average. A big level support got hit. If the bulls were going to take it, right? You would think this is where they're going to take it, right? You would think they're going to try and hold. You had a big reversal on Friday. The thing bulls are going to look for this week is a breakout here. Can you break through some of these levels that we failed at to hold support? If that happens, you may start to see a little bit of a climb. I am cautious to say that the low is in for this stock market pullback, right? If we take a look at how much we've pulled back from the peak to trough, you get about an 8% pullback. That's an good pullback. It's not a crazy pullback. It's not a monstrous pullback, but it's a pullback. And I think that this market just really needed that. So, could the low be in? Maybe. I think the price action signals that I'd be looking for, like I said, would be some kind of break of structure here, right? A move back above. And this week with CPI, the market is definitely looking for cool CPI prints. If you get a breakout on CPI being cool, that could give the market some confidence to continue to kind of recover. But if CPI comes in hot this week, very possible that even if you do get a bounce, it could fade very hard on a poor CPI report. So yes, it could go either ways. I think CPI is pretty critical there, but I would be bullish if you actually saw a break above and closure above this area. If that happens, I'd be looking for pullbacks and continue to add shares to companies that I like, and maybe even find some technical setups on a momentum trade on the S&P or NASDAQ or something like that. Moving on to the NASDAQ, you can see a very similar concept, right? So you had this big sell-off here but it already did close below the 200-day moving average. So this keeps me very cautious on the NASDAQ at this time. But this trend line, actually, Frank walked into my office and he pointed out this trend line to me. If we move the moving averages off the screen, he pointed that we also hit a really long-term key level trend line here on the NASDAQ. So again, if bulls are going to take this market, you would think this would be the area, right? So as a long-term bull, I've been constructively buying the dip. I'm not going all in at these levels, but I'm starting to buy more shares. I have been out of the market for the most part in equities. For the most part, I don't have a huge positioning on stocks. I have some stuff that I've held long term, but I've been buying some stocks here in the last few days, really. I bought into Amazon, and in fact, I've got my list of stocks here. I could filter by green, being stocks that I actually own now, right? So Amazon, ISRG, Tesla, Uber, Nvidia, Google, and then yellow are things that I've sold puts on. So I sold puts on Robinhood, American Express, PayPal. So a couple companies, and I'm slowly starting to nibble on buying the dip here in this market. So we'll see. If it keeps going lower, I'd actually love that, because then I could get some better entries on stuff that I like. The Russell looks really rough, and you actually saw the Russell getting a bearish reading on the edge finder. So this may be a bit of a hedge trade for me as I buy all these stocks that I'm looking at. If you do get a swing back, I may look to add a small short position on the Russell and look for lower prices. This thing has been really rough, and with the edge finder giving me a -5 score, that may be a nice little hedge position for me to try out on the account. So I'm going to look for that opportunity. It is rare for me to short equities, but this chart is pretty broken, right? Especially with us teetering on the edge of a 20% sell-off. If it does trigger a 20% move lower from the high, in typical fashion, that would be considered a bear market for this market. So in Wall Street terms, a 20% move lower is considered a bear market. So we'll see if we're going to enter into a quote unquote bear market for the Russell. It's been rough a couple months, and a lot of people thought that this was going to be the big winner off of Trump winning the election. Maybe it will be. Maybe it will be in the long term. But right now, tariff concerns, inflation concerns, the Fed maybe not cutting rates, all these things really weighing on the Russell, and can't seem to catch a break. I thought the Russell would be doing a lot better by now, to be honest, this year. Still could have a turnaround, but right now looking really ugly, and I am going to go ahead and stay on the bearish side for this one. Another interesting chart right now is the dollar yen. Now, of course, dollar yen has been something that we've talked about a lot on the channel here recently, because the Japanese yen is really critical to the global stage, right? So with this key level of support broken, right, and this continued accumulation by institutional money of the Japanese yen, we discussed this earlier, but look, the Japanese yen saw some pretty aggressive accumulation. Long contracts spiked, short contracts diminished. We can see institutional money has taken a decisive swing on this. And can we look at this together? Let's look at the JPY historical COT data for a second. And what you'll see here is you will see, in fact, I'm going to make this bigger. One second. Okay, I can't believe I haven't done that sooner. I think this looks so much better. Let me know if you're an Edgefinder user, if this looks better for you, but this is our COT data history page, and I think I just made it like twice as good just by increasing the size of this chart. Anyways, the point that I wanted to show you guys is the yen is a fascinating currency. If we switch over to Japanese yen here, look at this. I mean, wow. Okay, so I'm glad I just made this chart bigger. I feel like it just made it so much easier to read this. Look at this. There was a time in 2024, yen was just the massive majority of short positions, or most positioning, institutional positioning, was dramatically bearish, right? And that is because of the old carry trade, right? The carry trade's been around for a long time. People short or sell the yen, and they buy higher yielding currencies or stocks in other places, essentially using the Bank of Japan as a borrowing source because of the low interest rates that they offer there, right? So you can borrow money at very low interest in Japan. So that's what people do. They borrow yen or short the Japanese yen, and they buy stuff with it. But that trade has reversed, and look at the change. This is telling you something, and I know I sound like a broken record because I've been talking about this on my channel for a while, but look at this blue bar rapidly jumping higher. You have institutional money accumulating bullish positioning on the Japanese yen. perhaps expecting the Bank of Japan to hike rates, and perhaps also to expect that this could put pressure on other places in the world, right? The yen carry trade breaking down a little bit causes some issues for global market liquidity. So we'll see, but I think that this is really worth keeping an eye on. I'll continue to cover it. It's part of the reason I am still bullish on the yen, still have some positioning on that, and I'm long TLT for a similar reason, right? This may signal some bigger risk-off themes in markets this year that we haven't seen for a while. We've been risk-on for a couple years. Maybe risk-off is here to stay for a little bit. We'll see. But really interesting stuff. And again, I'm actually going to stare at this chart for the next like 20 minutes after I stop recording because this is so cool. If I take a look at gold, right? So you can see gold accumulation over time has just gotten stronger and stronger. Really interesting. Net bullish positioning in yellow has been increasing over time. So, I like that story. And this is why we talk about on this channel so much tracking smart money and just how important it really can be. You can see these trends. If you're on the right side of this trend alongside institutional money, it's been a really profitable couple years if you've just been piling on longs on gold. Meanwhile, retail traders trying to, short it or go against it may not have access to this information or may not be studying it, and having it is pretty critical. Like I said, if you want a copy of the Edge Finder, that sale is ending soon. Use code YTVIP at checkout. Also, if you want to support my page and you don't want to buy anything, totally cool. Just hit the thumbs up button. I appreciate it. And in the description down below, if you're looking for a better brokerage, if you're looking for a prop firm to use, if you're looking for free value, you can join our Telegram channel. But definitely hit up the links in the description down below. There's plenty of free value there. Thank you very much for watching and have a great and safe trading week ahead.